The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading.
For over 95 years, we've set the bar. Power, we restored it. Protection, we reinvented it. Record yields, we redefined it. If there's one thing we know at FS, it's that just because something hasn't been done, doesn't mean it can't be done. We're never satisfied unless we take your farming operation to the next level. Run your equipment at peak efficiency and bust the bins this season. Visit fssystem.com.
Well, as we take a look at the market trade action that we saw on Thursday, the grains, they were mixed. This corn market is just looking kind of ugly. A decent day in beans once again, while on the flip side, livestock had a really strong day. Cattle, hogs, all higher. Crude oil up. Stock market, liking the fact that the Fed held interest rates steady. A pretty strong day there. We got a lot to talk about. Joining us here on the program today for our market analysis, we always appreciate the time with Brian Doherty, Senior Market Advisor at Total Farm Marketing. And Brian, good to catch up with you again. Hope you're having a great week so far.
Jesse, we can't complain. We like what we see in the bean market. A little bit discouraged on the corn market, and if you're if you stay with your stock market, we're up about 4.5% here in the last 5 days. So that looked pretty discouraging 2 weeks ago too. So don't give up on corn yet, but yields they're just across the board better than expected. We're seeing basis levels wide in the last couple of weeks. I think farmers just kind of got caught with this extra supply that they weren't anticipating. I think some of that's going to town, and the end user knows it. So they're just they went back on their heels here. I don't want to say exports have been poor. They've actually picked up, but we're just in one of those funks right here where the technicals don't look good. The funds are selling, and corn looks like it's poised to retest its contract lows.
Well, I was going to start with this corn market. And I know it's not necessarily everyone's favorite subject right now, but to your points, I'll add on to that as well. I mean, if you look at a corn chart, I know we closed right on the nose at 470 in D's corn on Thursday. Are we worried that there's more downside potential here? Any chart signals or any of the other chatter you're hearing as we move forward with lack of a bullish story in this corn market, Brian?
So there's a couple of things. One is let's look at where the contract low was established. That was at 467 3/4, so a couple of cents away yet, and that was established back in the 19th of September. And we talked back then that typically the market tries to carve out a low sometime in that August September window, often around a USDA report, and then we look at what it appears to be a post-harvest or thinking about a post-harvest recovery, and then we drop back. Seasonally, that is, if you look at it from a historical perspective, late October, first couple of weeks in November, generally not too friendly for price. So if we do end up moving back down, I believe out of the last 15, so don't quote me on this exactly, but I think 7 of the last 15 years, we've seen the low put in November. So it comes back down, traces into the low. And that's that usually in bigger crop years or years where the yield's better than expected. That's the key, where you get some of that selling. It's just not corn alone, though. Wheat has struggled, and when wheat loses ground, it's tough for corn to gain ground. Beans, on the other hand, kind of the lone star here. Again, that tight carry out at 220 million bushels. A little early again, yet to really post any kind of conclusion that you're going to see a lower bean yield, but not ideal in South America and Brazil in particular. I can't draw conclusions yet, but when you're not ideal here at the end of October, early November, it gets tougher to argue for a robust crop. And the market's reflecting that.
Yeah, the market is reflecting that. And to your point there, it feels like in the case of corn and wheat, you made the comment about end users knowing it in corn. I feel like with both corn and wheat, we're just having to churn lower here to try and find some sort of demand. Weekly export sales were okay, but not great. It feels like just with a lack of a bullish story here, these markets are going down, trying to find and stir up some demand here, Brian.
And keep in mind, harvest is running ahead of schedule, so that's a reflection
Mhm.
of perhaps smaller yield than could have been. Think about if yield is 180, 1.5 instead of 173. But except for this kind of wet pattern that the market moved into, harvest has been moving right along. The 5-year average is 66%, and this is all through Sunday. So as we see where the supply of corn is being sort of filtered, um, goes again back to sort of the perceptive mode. The end users perceive that there's not a shortfall of supply, and then I am hearing from some of my farmers who also, let's say, do trucking, that farmers are the overrun corn. They're letting it go. They're just it's more than they thought, and they just don't have the room for it. Um, the kind of concerning big picture scenario is that when farmers are holding a lot of inventory, it gets really tough to get any substantial rally in a market because there's an army of them out there that as prices do recover and rally, that they're selling into this because they need to. They have to. The market knows there's only a shelf life of so much corn in storage until it has to be moved.
So, risk management wise, is there something we should consider as we watch a fairly quiet, drifting type of market in corn in particular? Is there something we should do to not get complacent with our risk management in this window here, Brian?
Well, that's a great question. So push a pencil to what it really costs you as a farmer to store. It's not the same cost for everybody by any stretch of the imagination. So push a pencil to that. If that doesn't really jive well and make you feel comfortable storing, then think about moving the inventory despite where the market is and then retaining the ownership on paper. Now, this time of year, the big advantage of storing is, or the big want in storage is threefold. One, get the crop off the field in a timely fashion. Two, anticipate that basis will get better or price will get better or both. So that's your two and your three. It's a time of year where once this stuff gets locked up in the bin, basis usually starts to do the heavy lifting. So that would be a reason to store corn. But if you're in doubt, talk to your advisor, talk to people that understand the different tools you might think about if you want to stay in front of the market because it's low enough that there's a lot of time between now and spring or somewhere where the whole world can change. And we've seen in the last 3 years, if we've learned anything, the world can get flipped upside down in a matter of months. And with crude oil holding above $80 a barrel, the dollar softer today, harvest winding down, you can certainly see that there may be some rationale to trying to be an owner in this market. The recent pullback, to your point, is going to find demand, and it's giving the end user a break that they didn't have just 2 weeks ago. So now they've got a break.
Well, and as well, and you've mentioned this too already, but the soybean market, I think a friendlier story in beans. We keep getting these crush numbers that are great, and just some of the worries in South America start to trickle in with their weather and some of their delays and the tightness of that overall balance sheet for soybeans. It feels like this soybean market is in a pretty solid range right now, where it has a good fundamental story underneath it to keep it somewhat elevated here for at least the foreseeable future, I would think, Brian.
It's got a nice looking chart. So what that means is when the market bottomed, it put in a pretty strong signal the day that it did. So we're going to call the bottom because that's where the low has been, the harvest low. So on October 12th, USDA report day, the market had a much larger trading range than the previous day and closed sharply higher. So that's called a bullish key reversal. Then it set back, and now it's recovered. And when the setback came, it came back to what we call a trend line. And today was really interesting as the market had a really solid close above a 200-day moving average, but it has resistance a little bit higher. And that in the January contract, you're looking at about 333 on a 50-day moving average, and a 100-day moving average is a little bit above that, around 340. So those are some kind of key areas. But boy, the bean market's really poised. If the weather forecasts in South America continue to sort of tread in the path that they've been on, And there are some, and maybe this is what's supporting beans, who think that this pattern right now, too wet in the south, too hot and dry in the north, that'll be locked in through December and into January. Now this gets really sort of interesting. Some private forecasters are saying, well, the Brazilian crop instead of, let's say, could be 165 million metric tons, could be 150. That's a lot of bushels in a metric ton. I'm rounding up, but if we use 40 million bushels per ton, that's 600 million bushels. So since I'm rounding up, it's probably closer to 500, 550, but that's a lot of bushels in the world market that they got to find them somewhere else.
We're having a conversation today with Brian Doherty, Senior Market Advisor at Total Farm Marketing. Brian, let's move over to livestock, and really a strong day there Thursday. Cattle, hogs, both live and feeder cattle and hogs. A lot of triple-digit gains seen on the board. Stock market sharply higher too, and I know that the stocks and the proteins have been fairly interconnected. So I'm just wondering, was the robustness in the stock market the main driver of cattle and hogs moving higher, or is there something else?
It sure didn't hurt. So let's put it that way. Perception again. Let's talk about perception. All of a sudden, the stock market's up 4.5% in a week. People feel a little better about that. Interest rates don't look like they're going to rise. At least not. Well, they're not going to rise now. There's still, that talk out there that maybe one more increase, but it seems like the market's sort of thinking maybe not. So you have that. You have the dollar down. You've got strong technical buying today. The bears were handed their lunch today. That is, if you've been bearish lately, you've been on the right side. But when the market starts to go up, most traders will have some sort of, let's call it a stop area. That is to get stopped out. And so if you're short the market, the way to protect your gains, if you're a trader, is to place a buy stop in the marketplace. So as prices go up, they trigger this order. It's called a stop. It basically triggers an order to buy, and it buys at the market, which means it buys at the best price possible. Well, if there's a lot of buys being triggered, that adds upward pressure to price. I think that's a big component in the feeder market today, the hog market today. Live market, solid gains. I think you're looking at a cash market there that is sort of stressed, but it certainly is showing signs. I mean, if you look at that choice select spread, that supplies are still tight, and that the consumer is still jumping in and going right at it.
Yeah, they are definitely jumping in and going right at it. Well, and I know we had that fairly bearish October cattle on feed report, but still, a lot of talk out there that this herd's not going to get rebuilt anytime soon necessarily. It could very well be 2025 before this cattle herd is rebuilt. And so what's that going to do for prices at the meat counter, and how's that going to shape up things for exports and more? And it just feels like with the tightness overall in this cattle market that even the downturn in prices here after that recent cattle on feed report just feels like there's an opportunity still to maybe move this market at least sideways, if not move it back higher a little bit here, Brian.
You hit the nail on the head from the supply side when you're looking at the lowest beef herd in record keeping, right? So the only way you can grow the beef herd is you've got to either import from somewhere else heifers and cows, or you've got to retain more heifers and cows. You can't maintain the same number. They only have one calf. So you have to be in a position to see some type of retained heifer cow mix, and that just exasperates the already tight supply. But it does, price will allow that to happen. So ultimately, we look at that cattle on feed report and kind of scratch our head. Well, yeah, on feed number was bigger than a year ago. Placement number was bigger than, marketing smaller. You start looking at marketings and placements and you go, well, that might have as much to do on any one month as to whether at the end of one month, whether at the beginning of another, whether it's poor conditions, hot. Remember how hot it was at the end of August? Well, who's moving cattle in that heat, right? So maybe that was an impact that more cattle went in to the feedlots in September then. So I wouldn't take too much into one report. We need to see a series of reports like we did for multiple months and years that continue to suggest a declining herd size.
Brian, how about the dairy market? Seeing kind of mixed, some green, some red on the screen there Thursday. What's your thoughts in the dairy trade?
Yeah, and it seems to be trying to firm up today. There was some really nice technical activity yesterday where new contract lows were scored, and then markets either went higher and closed higher, which posted a hook reversal, or some contracts a bullish key reversal. The weaker dollar today, expectations that could help cheese movement, gave the market a boost. There wasn't a whole lot of activity in the cheese complex today. The butters, which have been the shining star, has also been sort of the wink link here the last, let's call it, couple of weeks. But as we look at kind of the big picture, where things are at today, at a penny and a half higher on the blocks, but butter is still down 2.25 cents, down 13 3/4 yesterday. So butter has come down now to probably generate some demand. But the milk market has its own sort of enemies, and that is it's been volatile. We've had kind of demand that ebbs and flows. And then we still haven't quite, in my view of the world, really convinced the marketplace that we've contracted the herd enough to create a supply, not shortage, but a tight enough supply to make the end user really bid it up.
Well, Brian, before we let you go, any final thoughts you would share, anything you would reiterate to folks to think about here today?
Just, I'll start with soybeans. Nice recovery here, hitting some of their best prices in multiple weeks. We saw that in corn. We saw that in wheat here a couple of weeks ago, and they quickly flipped over. So we've talked about weather in South America being a factor. Make sure you're smart on how you work with your beans. If you're not thinking that they've got an immediate 50 cents a dollar higher, I'd probably sell into the rally, retain ownership on paper, forego the storage cost, expect that there could be some better basis down the road, but not necessarily. All depends on Southern Hemisphere weather. Point of it is, the bean market's one of the few markets that have offered some rally here to reward you if you're a holder. So I'd watch the bean market. Otherwise, end users really start looking at this corn market. If you're a dairy, if you're a hog operator, corn's was back on sale. And doesn't mean it can't get cheaper, but you can't produce it for this. So just keep that in mind.
Well, Brian, I know if folks have questions, they could reach out to you there at Total Farm Marketing, website, email, or a good old-fashioned phone call. How can they get a hold of you, Brian?
Well, the good old-fashioned phone call is probably our preferred method, 800-334-9779. And then the email would be Brian with a Y at totalfarmmarketing.com. And then if you just want to look at our website, totalfarmmarketing.com, take a peek. We've got a lot of good resources there. And you can eventually connect through us on the website as well.
Brian, always appreciate the time. Thanks so much. Have a fantastic weekend, and we will talk to you next week.
That sounds excellent. Thank you. Appreciate that, Jesse.
Brian Doherty with Total Farm Marketing joining us here today on Market Talk, brought to you by Growmark FS. Thanks for joining us. Find us at markettalkag.com. I'm Jesse Allen. Have a great afternoon.